What's going on, guys? It's David Piatek and Lourdes Fernando. And today we're going to talk about what happens after you've been pre approved. A lot of people get lost in the sauce, and we get a lot of calls about that. So, if you guys don't know, the first step really into understanding your financial picture and what your budget's really going to be is with the pre approval piece, right? So, your lender's going to review all your income documents, your assets, your eligibility for the VA home loan, and so that way they know your financial picture, right? They kind of set what the budget is. And remember, one important thing before we get kicked off: a pre-approved amount is not necessarily the amount you're actually qualified for, because you actually qualify for a mortgage payment. So make sure you find out what that is before you kind of start that search. And just because they give you the max doesn't mean you should be going up to it. Lourdes is a realtor. She's an Army veteran. She does a lot with multifamilies and investors. We have a whole investor series about that. But Lourdes, walk us through, what are some of the first steps that someone takes after they got through that first step of being pre approved?
So, the very first thing is to make sure that your budget is solidified, exactly
Yes.
what you say. Make sure that the payments make sense for you. Just because you qualify for a higher amount doesn't mean you need to go all the way up there. It's what's comfortable with your current lifestyle. I've been house poor before and we ended up selling that house because, the taxes were significantly different in one area than the other. So that threw our budget completely out the window. And then we had a increase when our taxes went up. And it was a pretty substantial one. So we jumped into the house poor category, and that's something that you definitely need to understand upfront. And a next thing that you want to look for is make sure that the neighborhoods and if you're looking for a particular school district and everything like that, that your pre-approval actually matches like what you're looking for. So getting honed in with what your criteria is up front can really help you during the process.
Yeah, and I'll add to that, Loris, because that is a question that I get from a lot of people that in the very early stages, right? They're like, I kind of need help. We're thinking about buying in this area. What do you think? And again, it kind of goes back to, let's do a budget review, financial review, because it'll set those parameters. And normally I'll have people go and look at 2 or 3 homes, right? Not homes that you like, but in areas you're thinking about being in. And then we look at the numbers and we're like, wait a second. Either those numbers are too high and you want to be much lower in the monthly payment, or the opposite happens. They're like, wait a second, I'm actually comfortable. And in order to get to where I want to be, I need to go up a little bit on my budget. Hopefully, it's the opposite. You go lower, but that's normally not the case, right? So thank you for that. But yeah, that's an important note because it happens more often than you guys think. Now, when it comes to the searching process, right? If you're working with let's say, a real estate professional, how does one, when they're signed up with them, get notified of maybe new listings, or like, how do I even search for it outside of just like using like the big companies that are online?
Right. So a good agent would put you on a search and also kind of screen those out for you. So it's important to understand like what your must-haves are, identifying your location and everything like that. So the agent can put you on a search and then start screening those out for you before you even go waste your time to see the property. So it's very important for you to stay upfront with your real estate agent. If you go and you say, you know what, I need a basement. I need a garage. These are the things that are very important to me. If it does not have these items, then I don't want it. This will actually help because we can put that in the search criteria, and if it doesn't meet these items, then you won't even get those listings. So that way you can hone in with your criteria, you can see properties that actually fit what you want.
Right. And I'll add to that too, is that sometimes those wants, needs change in your search. Okay. It's just like when you watch something like the HGTVs where they're like, these are all the things that I want. And then the things that they want are like $1 million house when they're budgeting 200,000. Okay. So one, you have a reality of what you want. But there's another thing that happens. And I was talking with a client the other day, and he essentially said that, David, he's like, when I walked in the house, he's like, I knew it was for me, right?
Oh,
It didn't meet the requirements that I had, but it just felt like home. And It was what I was looking for, the design of the house, the layout, all of that worked for them. So I would also not discount other places because it is a give and take a lot of times. You can't, unless you're building a custom home and you just have an unlimited budget, right? That may be a different story. But for most of us out there, it's like, well, this is what I'm looking for. And sometimes in some of these school districts where they're just insanely expensive, right? And you made a good point with those taxes because you can go a county over or a city over, and all of a sudden the tax base is way different, right? And don't forget, if you have VA disability and you have these property tax exemptions, some counties won't let you exempt school taxes, right? That's and this everyone everywhere's different, so make sure you check that out. Plus, if there's special taxes, you may be liable for that. So just knowing that area really well helps you out throughout that process. And Lord, so we know every market's different, and we've been talking a lot lately about the shifting real estate market. Some markets we see are having more price decreases. Other ones are staying neutrals. Other markets are increasing in price. And so timing is a question I've been getting a lot lately. They're like, David, well, we're seeing price declines. Should we jump in now or should we wait another year to do it? And I know it's market driven. And one thing, Loris, I say to everybody is that it's not the market, it's you, right? Where you are in life and what you can afford is then it's time for you to buy. Because if you're trying to time the market, please let me know what's going to happen because Lourdes and I will both jump in on that. But yeah, so if you can maybe just walk us through a little bit about, if a property comes on the market you like, should you jump on it? What does that look like?
Yeah, exactly what you said, David. If it makes financial sense for you, I did get a email saying, "Hey, I want my payments to be around $1,000 a month, with the condo." And I'm all like, "Oh, these the HOA fees are $500 alone. Like that
Right.
means it has to be close to about anywhere between 50 to $80,000 for a condo for you to fit your $1,000 budget with HOAs being so high."
Right.
So exactly what you said is if it's best for you, if it makes sense for you, then it's a time, it's a time to move. So that's one of the things that I would jump in if it makes financial sense. And then also for your lifestyle too, because a lot of people like myself, I like to travel. And I remember when I was house poor, I was not traveling. I could do nothing.
I
So
remember that time. I
I was so
remember.
stressed out. I was like, all the things that were so important to me, I can't do no more. Eating out, I eat out a lot. I wasn't able to do those things. So making sure that you account for your lifestyle. Are you planning to have children? Like expand your family? Like all these things are very important for you to consider while having a home. I think that that's one thing that you should look at.
Yeah, and you brought up a good point is that sometimes when you're looking at homes as well, is that do you buy the home or a studio apartment, a 1 bedroom, 2 bedroom, 3 bedroom, 4 bedroom, right? And just understanding that some properties are more marketable than others, right? And sometimes you want to go into that maybe second or third home, depending on your budget. Because remember, values historically, right, go up. So even when we see price drops, this should be like 2000, even if it's like 2008 again, to me, it feels like it doesn't make a difference because even when you bought at the worst time possible in 2008, you're doing just fine now in most markets. So just kind of keep that in mind when you go through that process.
Right.
Let's talk about making the offer. Okay, so let's say you searched, you going out actively looking at homes, a home comes in the market, and you're like, I love it, I want to make an offer. What happens at that point?
Yeah, so a good agent would run the numbers for you, just give you preliminary numbers. Of course, I would reach out to your lender just to make sure that, the monthly payments fit within your budget. And once the numbers make sense, and I've had so many times where, I run the numbers, they're like, oh my God, taxes are so high. Like that payment is way above my budget. And we don't submit. So those numbers and having that close relationship with your lender is imperative. So if everything makes sense, then we make make sure that the value is good. So we run what's called a comparative market analysis, and we look at what everything sold in the last 6 months within a 1 mile radius. Now, if you're in a rural area, we can start to expand that search, and we're looking for properties that are very similar to the one that you're submitting an offer for. So if it's let's say has a garage, if it has a basement, if it has some of these, a pool, actually not a pool because that doesn't give much valuation, but things that would give valuation. Then you look at the condition of the property, if it's been recently renovated versus something that needs a lot of work. Those are two different properties to compare. So there's like a whole science, but the reason that you want to get as close as to these comparables is when the appraiser goes in, you want to make sure that the property is going to appraise. And this is very important when submitting an offer, because if everything is selling for, let's say, $250,000 and we're submitting something for 280, then there's a $30,000 difference that we may have coming up with the appraisal. And if for whatever reason it doesn't appraise with the VA home loan, we can do what's called Tidewater and give our comparables that we use to justify this price. So it all has to make sense. And I know we've had so many like issues with homes, like, um, can we talk a little bit about Tidewater? Because
Yeah,
I
I'll
think
I'll
it's
I'll
very
touch
important
on it.
about that.
Yeah, I'll touch on it briefly because I have a whole video on it. But essentially, the VA loan is the only loan product that I know of that if the appraiser goes out to the property, they feel they can't get the value for the home, they will issue Tidewater. In essence, a buyer's agent or seller's agent has to submit three comparables to the lender that submits them to the appraiser for them to use as comparables. Now, recently we had that happen, and I just told everyone, like, let's not freak out. Let's just submit it, and it actually came in higher than what they were purchasing for. Just the appraiser didn't know the area, and that's okay. So that's one of the big benefits of the VA loan is that Tidewater piece. So when I tell people, it's like if no call is a good thing, right? So if I'm not hearing anything, then I'm assuming it's all going to be just fine. And one thing to add to what Loris was talking about is that for some people, you know, a appraised value is what people are paying for homes around you, right? So that's what the appraisal looks at, the comparables. But it's not necessarily the price of the house, like what you want to pay for it. Because in that
Mhm.
example, 250, if you really want this house and you're like, I'm gonna pay 280 and I'm gonna put 30,000 out of pocket to buy it, you can do that all day long, right? We have people that do that 50, 100, sometimes it's a couple thousand. Sometimes it's 100,000 more just because of the market. They know it appreciates. They know it's their forever home, or maybe it's a custom home that they're buying and they just can't find comps for it. So just kind of note that it's what you want to make it, but also know the financial implications of that. So that's a good point on that, Lourdes. And another thing that Lourdes and I use as a strategy that works most of the time, I'll say, because Lourdes will CC me on an offer when making the offer to the listing agent. And why this is important for if you're a loan officer, a realtor, you're a consumer, and you're working with a team, you want to open up communication as early as possible, just like in real life, right? You want to talk to somebody. You want to know that, hey, what is this pre-approval any good, right? And those are the things that make it a competitive edge that open it up early in the process. And we get a lot of compliments like, oh wow, we just got the contract, you're calling, it's Saturday night, because I want to go through it with them, because sometimes V loans don't get the best rep, right, Loris? This is why we do all this, because we want to empower you to be able to have the right team. And so when agents are like, well, no, we don't want to CC the lender, we don't want to get them involved, it seems very odd. And there's a lot of agents that don't want to do it. And I don't like, personally, I don't like working with them, because then they just don't have the veterans, like their interest, right? Because it makes sense. Like when you're a listing agent, Lourdes, and a lender calls you about a pre approval that was submitted, does that change the dynamic for you?
Yeah,
Big
definitely.
time.
Big time.
Yeah. So keep that in mind when you're working and interviewing these folks for that. And if your financial situation changes during the pre approval process, definitely reach out to the lender. Things like I had identity theft right? And all of a sudden my credit is jacked up, which just happened to people. You also don't want to open up new accounts, move money, have your credit pulled, stay in a tight position throughout that process. If something comes up that you have to make this move, right? And we have it, right? We have clients that are coming in from Germany, like, I need to buy a car. It's okay as long as it's communicated with your lender, because they could look at it and go, yeah, you have room to buy a car. This is the max budget. Just like Lourdes, like when you were buying a car, when you were looking at buying a house, Lourdes called me and she's like, David, I'm looking at buying this. Like, no, ain't gonna happen. We got to go with something cheaper. And so, but knowing that, again, empowers you. Buying a house shouldn't be a mystery, right? And this is why we do all these videos, because we want to give you guys all the info. And then you reach out, because I can help you with the lending side. If you want to reach out, Lourdes can help you with the real estate side, at least connecting you with the right people. I'm licensed across the country. So, I can, walk you through that process. And I actually do business across the country. So it's very different than, because we're not a call center. You actually talk with me and go through that. But it opens up that door of communication. To kind of circle back to what we originally started with, is opening that communication with the listing agent. Hey, they have my cell phone number. They can reach out to me like 7 days a week. I'm like 7-Eleven, always open, but not always doing business, right? So uh, people laugh at that all the time, but it's it is what it is. But that kind of gets you to that. Now, once you get under contract, Lourdes, a lot of people ask me about, do I have to do what's earnest deposit, right? So maybe you can explain that, because a lot of people are like, well, I'm a disabled veterans. Why do why do I have to put this money down? Or I'm using a VA loan. I have to put no money down. Why am I doing an earnest deposit?
Yeah, so the earnest money is, for example, it is a payment that you're submitting over to an account saying, "Hey, I really want to purchase your property. I'm putting my money where your mouth is." It's standard in most cases. People see the higher the earnest money is, they say the more serious this individual is. I know when I bought my, well, I'm not gonna say how much, but I put I put a 1% down of my of the earnest money to show the sellers that I'm very serious about this property. Now, if you are fully qualified for this property and you decide, you know what, I'm going to walk away. And fully qualified means, you've gone through the inspection period, you've gone through the financing, you've gone through every single contingency that you're getting protected by, and you just walk away. The sellers get to keep the earnest money. Now, if you are during the inspection period and you're protected because you're not going in as is, you're in an inspection period and you say, you know what, this property is not for me, you get your earnest money back. And typically, your earnest money is due within the first 24 to 48 hours of you going under contract. So that money is typically 1 to 2%, and it's due upfront.
Yes. And so the way that money is protected is with contingencies, like uh, what is it? Inspection contingency, financing contingency, appraisal contingency. Those are discussions you want to have with your realtor upfront. Talk with your lender as well. Okay. Uh, that's how your money is protected. Because if you do the inspection, you're like, 50 things are wrong, which is kind of normal. But you're like, hey, these are the three things that I can't live with. There's a broken sewer. We had a recent one where the septic had a crack in it. And if you go to the sellers and like, hey, this is going to cost me 10 grand to fix, I'm not doing it, you do it, then the deal might fall apart, right? And then you get your earnest money back.
Right.
Otherwise, we've seen people split costs 50-50 because they're like, hey, this is just kind of what it is, but we're going to split that cost. And that money, even if you're doing 100% financing, the seller's covering all your closing costs, you still typically have to put an earnest deposit down. I've only seen a handful of transactions where zero money was put, and that's normally family to family
Right.
purchases. That's the only time. Otherwise, it's, like I said, 1-2% is a strong offer. We see people do $500, and we see people do a 10% earnest deposit. Just depends on how bad you want it. And remember, that's money you get back at closing. So if all closing costs are paid for, you're doing 100% financing, you can actually get that money back at closing. So don't be worried about it. Otherwise, it'll just be applied towards closing costs and or down payment. It doesn't make a difference because it's all going to be a wash at the end of the day. So that kind of gets you to that. Now, once you go under contract, that's when all the fun begins, and we'll do a whole separate video for that. But just make sure you send that contract to your lender right away so they can start working on it. But that kind of gives you kind of an overall step from, hey, I'm pre-approved to I'm under contract. And then we'll do another video on from contract to close. That'll be a good one because a lot of moving pieces come in that process. So thank you, lawyers, for being on. And, to everyone out there, please hit the like and subscribe button, share with the veterans so we can get the word out, and drop a comment so we can get the YouTube algorithm to share the information with fellow veterans.